It seems as if the message from the Fed is that rates need to stay higher for longer, or at least until inflation is back to target. What's your view?
Thank you. Thank you very much, Stan, for having me. Always a pleasure. Indeed, I think the key message we got from Jerome Powell's speech is that he did not intend to spook the markets. And I think this is a very key point to mention, because up until now, his main point was a very hawkish sentiment, very hawkish rhetoric to maintain the market sort of expectations in terms of higher interest rates. I think his comments were very measured. He identified the data dependency, which is required, and he did, of course, leave room open for further rate hikes, but also clarified that they could be potentially done. So it is going back to the data dependency on inflation. My point, and what we would like to see, is the path of employment. Because we've been doing a lot of analysis on the U.S. employment, not from a top-down perspective, which would expect unemployment gradually to rise to more normalized levels, but from a bottom-up perspective. And from a bottom-up perspective, the usual sectors of manufacturing, construction have not shown any signs of weakness. We only have some information and temporary health services. So there is still potentially some work to be done.
Okay, so when we talk about the work that still needs to be done at this juncture, at least from a Fed perspective, does any of this change your market strategy as we head into September? You just mentioned the jobs outlook's going to be key to watch. We'll get the latest numbers out on Friday. Does any of this change your current market view?
There's only one level of uncertainty, Dan, and that is on the inflation side. Because inflation has dropped quite significantly over the last 6 months, and the drop has been bigger and sharper than we expected. So we would expect a little bit of a rebound or stubbornness, if you like, in terms of the inflation. And we would hope that the Fed does not panic into increasing interest rates significantly on the back of that. It's just some normalization before inflation, in our view, stabilizes around that 3% level. We do not believe inflation is going to stabilize at 2%. We believe inflation is going to stabilize closer to 3%.